Most companies would love to have 18% growth, but that wasn't enough for Airbnb investors. Shares fell after the first quarter 2024 results were announced, but I think results were actually really solid. And if you take a step back and look at how the company is positioned in the market, what the balance sheet looks like, what their cash flow trajectory looks like, I think this was a really good report from Airbnb. Yes, guidance might not be quite what analysts were expecting, but there's really nothing that says that Airbnb isn't on the right path long term. So I want to dig into the results and what I think about the stock going forward. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's dig right into the results. You can see here that the theme is their new Icons project. This is a bunch of iconic experiences that the company is offering on their website. The interesting thing, and this was asked about on the conference call, is this is, I think, a prelude to the company doing more experiences through Airbnb. So something to think about for the future. Well, I'll get to that in just a second. This is a look at the high level numbers, 18% growth, like I said, year over year, $2.14 billion in revenue. Net income was $264 million. Adjusted EBITDA, $424 million, and free cash flow was $1.9 billion. Free cash flow is a little bit interesting for Airbnb. If you look at it over a long period of time, you can see that its free cash flow is very strong for this business, but it kind of ebbs and flows depending on the quarter. And you can see that with really high free cash flow this quarter, but $4.2 billion over the past year. So that's probably a better proxy for the health of the business. Gross booking volume up 12% to $22.9 billion. And nights and experiences booked up 9.5%. So this is where, as an investor, you get to the point where you go, okay, is 12% growth in gross booking volume, is that an acceptable number for Airbnb? Maybe some investors were expecting a little bit more, but I think coming out of the pandemic, there was a lot of extra travel that happened. I think we're obviously starting to pull back on that, especially as things like commodity costs go up, food costs go up. People are just going to be spending a little less on travel. So that doesn't necessarily mean that Airbnb is in a weaker strategic position, but it may mean that growth may not be exactly what analysts were expecting or investors were expecting over the next few quarters or years. So I'll get to that valuation piece, but that's kind of what the market is really thinking about from a reaction perspective. Like I said, they did talk a lot about their Icons launch, which was part of their summer release. And this came up in the conference call. Is kind of a question about what does this prelude for the future, and what I think we can kind of suss out of those comments is that eventually Airbnb is going to get more into the experiences business, so not necessarily just places to stay, but also unique experiences that you can do around the world. So maybe that will be part of this Icons piece. Maybe that will be something that will be added in the future. But as they move to being more of a concierge, that's the way that I would think about some of these little additions, expanding beyond just the core product that we know Airbnb to be. Group trips was the other addition from a development perspective. And one of the interesting things that they talked about was how they're focusing more on the app, and app downloads were actually up pretty significantly. So clearly leaning into this being a mobile first business, and I think connecting people together on the Airbnb app, make it a little bit more of a social experience, is probably a right move from a strategic perspective. Management also puts out some charts that show just the trajectory of free cash flow. This is on a trailing 12-month basis. And you can see that after the first quarter of 2022, 23, and 24, free cash flow is improving steadily year after year. What are they doing with that free cash flow? Well, one of the things that they're doing is starting to buy back more shares. They say that this is to manage the impact of dilution, but obviously the share count overall is starting to decline. So a little bit of money returned to shareholders in that way. On the balance sheet, and this is always one of the things I look at for Airbnb, you still have an extremely strong balance sheet, obviously $1.9 billion in cash from operations. But at the end of the quarter, they had $11.1 billion of cash and equivalents and short-term investments. That was the money that Airbnb owns itself. Also had $8.7 billion of funds held on behalf of customers. This is the money that when you sign up for an Airbnb, let's say it's 3 months from now, you're going to pay your $200 a night in advance. Airbnb keeps that money and it doesn't actually go to the host until after the stay is completed. So in the meantime, Airbnb is holding that cash and they can actually collect interest on that cash that they're holding on your behalf. That's what this $8.7 billion in funds is. And this is also how you get to the point where over the past year, Airbnb has generated $777 million in interest income. That's from this cash that's on the balance sheet. So something that we want to consider when you look at the valuation of the company, this $11.1 billion worth of cash, but the nearly $20 billion worth of cash is something that you want to consider when you look at the income statement and the income that they're making off of that cash. This is where things got a little bit disappointing for investors, and this is why the stock was down 6.9% in trading today. Management said for the second quarter, they expect a revenue of $2.68 to $2.74 billion. That's up 8 to 10% versus a year ago. So are we starting to see Airbnb's growth slow? I think that is clearly the case. There was a couple of things that they talked a lot about, the timing of Easter, some more difficult comps. So they do expect revenue growth to accelerate in Q3 and Q4, but the next quarter will be a little bit weak. And this is really what investors were focused on. Is this a sign that the economy is slowing, the travel is slowing? That could be the case. So that's when you may want to pull back on how much you're valuing this company at from an investment perspective. But let's get to those numbers too, because that's where I think Airbnb looks really appealing. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. As of the end of the day on Thursday, Airbnb's market cap is right around $100 billion, almost exactly $100 billion right now. So if you subtract out the $11.1 billion in cash that's on the balance sheet, you get about $89 billion from an enterprise value that you're paying for as an investor. That's really the valuation that you're paying for the company. Now, looking at the $4.2 billion in free cash flow from the business over the past year, that means that Airbnb's stock trades for 21 times free cash flow. I think that's a pretty good multiple for a company that's still growing in double digits. And this is where I think we need to think about what the future of Airbnb looks like. Yes, it is still a company that is in growth mode just with its core business. I think there's a lot of opportunities not only to expand internationally, but they often talk about 9 out of 10 stays are still in hotels. Those are people that could potentially be staying in Airbnbs long term. But the really exciting growth potential, I think, for Airbnb is moving beyond just places to stay when you're on vacation or when you're in a long-term stay. It's moving into experiences, being that concierge that Brian Chesky has talked about in the last couple of conference calls. Now they're making steps in that direction, using things like artificial intelligence to be more like a chatbot concierge with your stay. But the ultimate goal is to have that chatbot be able to actually work with you, maybe build out your stay, maybe personalize it specifically for you, expand into things like air travel and experiences. These are all areas where Airbnb could play a really pivotal role in how we travel in the future. And I think ultimately that's the value of the company long term, and that's the growth potential. So just the core business that we have today, I think trading at a really reasonable multiple. But what you're getting with this company is a business that's run by a visionary founder, really solid foundation in a two-sided market, just all the things that you want to have as an investor. And when you can get it at the kind of price that we're getting it at today, I think this is the kind of buying opportunity that I look for with phenomenal companies like this. And if the stock has even any weakness over the next few months or quarters, I think this is a phenomenal buying opportunity for Airbnb. This quarter, yes, it had a few signs of weakness when you look at guidance and things like that. But if you take a step back and look at what you're getting with this company overall and the phenomenal position that they have, the phenomenal leadership that they have, I think Airbnb is a great buy, especially after the recent pullback in the stock. But what do you think? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.